the securities market, we talk about many things. We talk about stocks, the buying and selling of shares, bull runs, and bear markets. But there is a crucial clique that plays a significant role in the buying and selling of shares. And so today, we will have a candid conversation on the role of stockbrokers in the Kenyan market. Karibu sana, Mr. Gichuhi.
My name is Samuel Gichuhi. I work for NCBA Investment Bank. I'm the head of business development at the brokerage division.
To the first question, Mr. Gichuhi. Many a times we talk about stocks, but people don't know what stocks are. They think they're floating things in the air because these are not tangible assets that we see like land. So maybe you can tell us, what are stocks?
Stock is a part ownership of an entity. So a stock can be, for simplicity, if for example you're in a chama and you all put in 1,000 shillings to join the chama, then maybe that 1,000 shillings, if there's 10 of you, is 10% of that chama, which means you own 10% of the stock of that chama. So stocks can have different names. They can be called equities, they can be called shares, they can be called stocks. But generally, it's just a unit. A share is a unit of ownership in a company. In terms of tangibility, in the past, when you bought shares, you would buy shares and get a certificate showing that you own a certain amount of shares. But what happens is shares are supposed to be liquid assets, meaning there should be an ability to exchange, buy and sell them. And if you're using a certificate, then it means, like you mentioned, land, that the period of transferring a certificate, because it is physical, is long, which means it reduces the liquidity of a stock. So for the sake of liquidity, then it meant that over time, stocks were made, we call it immobilization, which means now they are no longer in certificate form, but they are in digital form, and those are stored at the Central Depository, CDSC, Central Depository and Settlement Corporation. Now, because of that, in the past, when you bought a share, it would take about 7 days. In fact, initially it used to be like 21 days, then it came down to 7 days before that certificate can be given to you. So you can imagine if you buy a share, you have to wait another maybe 7 days before you can even sell it. That's a very long time. Today we are down to T+3, which is 3 days settlement. But in the last year, and Nairobi Securities Exchange now does day trading, which means you can actually buy and sell a share within the same day. So that is the advantage of now the digitization.
And in the buying and selling of shares, investors need stockbrokers. So tell us, who are stockbrokers? What do stockbrokers do? And matter of fact, why are they even called stockbrokers in the first place?
Yeah, a stockbroker is somebody who sits as an intermediary. In order to buy or sell shares on a market, you need a stockbroker. Now, stockbrokers can be either just simply stockbrokers, which means they just give you the platform to buy and sell and don't give you anything. But then there is another level of stock brokerage, which is the stockbroker now gives you more services like research and information and advice so that you can be able to make informed decisions. Now, our stockbrokers are regulated by the Capital Markets Authority, and so based on those regulations, only stockbrokers can be able to represent investors at the Nairobi Securities Exchange in buying and selling of shares. But that's not all the stockbrokers do. We also do bonds. We also facilitate investors to trade in bonds. We also facilitate traders in sometimes over-the-counter market, where some stockbrokers will have over-the-counter products sitting within their books.
Considering a torrent of narratives that circulate that stockbrokers will cheat you almost half the time, so what measures are being taken to ensure the integrity and transparency of stockbrokers' operations in Kenya?
Well, as I said, we are regulated by the Capital Markets Authority. And of course, those regulations include whatever integrity and whatever measures need to be taken to protect investors from any rogue activities of a stockbroker. Now, of course, these kind of activities, which can which can be quite a myriad of things that may happen within a market, are within those regulations. Now, of course, as stockbrokers, we also ensure that we are we disclose everything we do to our investors, which is also a level of self-regulation to make sure that our investors know and understand what investment decisions they are making. Now, remember, as stockbrokers, we do not make decisions for investors because we are not managing the investments, we are facilitating the investments. So our role is as far as advising and supporting investors, but the end decision is always made by the investor. We also only operate on instructions on written and verifiable instructions from those investors to make sure that there are no activities that are happening that go against the investors.
And how do stockbrokers in Kenya address the concerns of market manipulation and insider trading? But while at it, what is insider trading?
Market manipulation and insider trading tend to happen when you see efficient markets, or the hypothesis of efficient markets means that one, you cannot outperform a market at the market consistently. Why? Because all investors should have all the information available at the same time. So that means that as stockbrokers and as the industry, we have to make sure that our investors have ready access to any information that may materially affect their investments. Now, what happens with insider trading is when an investor has information that can ideally affect the stock, can ideally affect the price of a stock, but that information is not available in the market. So, for example, that investor is a director of a company, so it means they sit on the board of the company, they know something that company is going to be launching, and we have seen in the United States, of course, several cases like that, where an investor knew beforehand something was going to happen, so they either share that information with a spouse or a friend or they themselves went and took positions in the market using that information. So this, of course, as I said, is we are regulated by the Capital Markets Authority, so they are also watching the market to see if any of these things happen. You'll find that many companies will require their directors and even employees to seek approvals whenever they want to trade to make sure that they do not trade shares within a closed period. Because whenever every company, when they announce the results, there's a 1 month period where their own employees and people who would have any information are allowed to trade. So there are also such measures in place to mitigate such situations.
How are stockbrokers in Kenya adapting to the rise of digital platforms and online trading?
Well, the market has actually taken up digitization. And as I said, one of the things that have happened, for example, for us to reach intraday trading is really the uptick of digital trading. Because again, markets are about liquidity and markets work on information. So when you get any information about the market, you want to be able to act immediately or to act, to buy or sell based on that information. So as NCBA Investment Bank, for example, we have an online trading platform. And this online trading platform allows investors to fund their account, buy and sell shares real time. So what you're seeing behind me, for example, is real-time market information. Our investors have that on their computers, on their phones at home, and they're able to trade, buy or sell a share on the market instantly. So unlike in the past, what would happen is if you wanted to buy a share, you would probably send me an email. Then we would make sure that that email is, of course, allowed to send that instruction. Then based on that instruction, I would place the order on the market. And that order, then, if it trades, then we would come back to you and say we traded, isn't it? Now, you can imagine how much time it would take if you got the information just now on the board. You send me the email, I put the order, there is a time lag. The price may have changed. Now, digitization has changed all that. Because what you're seeing is the real-time information. You can immediately, if you have the funds in place, you can immediately place an order. Now you can imagine in the past when trading was manual. It means even the people who are doing the wall behind me would be someone in a green jacket writing those figures with a chalk. and then there would be, it was called the open outcry system, and then there would be many brokers standing around here shouting out prices. Buy for me at this much. And you can imagine how many people can that one guy with a chalk hear at the same time. So you can see the advantage of digitization. We can see that CDSC and the digitization of the market also increased trading volumes significantly.
Well answered, well answered. So, in an exclusive interview with the chairman of the Nairobi Securities Exchange, Mr. Kiprono Kitoni, he was for the notion that privatization of state-owned entities, which some will be listed on the stock exchange, is good news, and it is a real show of confidence that the markets can be deepened. So, do you share the same sentiments as Mr. Kitoni, and what is your perspective on the privatization of state-owned entities?
I happened to be part of the last privatization wave, and we did see companies like Kengen, and several government-related entities list on the Nairobi Securities Exchange. And that was responsible for huge growth on the Nairobi Securities Exchange. Of course, during the same period, we also saw several other blue-chip companies like even Safaricom list, and we saw the growth of CDSC accounts from below a very low number to over 1.8 million accounts on the accounts which could trade directly on the Nairobi Securities Exchange. So for us, it's true, privatization gives the investing public access to investing. It gives them access to participate in development and to participate in the economy directly by putting their funds into these companies rather than them being just government driven. So I do believe that privatization is a good thing for investors, because then it just increases the available options for investors to invest in. It also gives them a platform to participate.
As a stockbroker, which advice will you give investors so that they can navigate the challenges of market volatility and economic uncertainties?
I think is leverage on the information, leverage on your broker. Choose the right stockbroker. Choose somebody who gives you, good research, good information. For example, we give you personal, somebody you can reach personally to talk to and discuss your portfolio, to help you structure your portfolio, understand when is a good time to buy or sell. Now we even have a WhatsApp channel where you can just go and see, what is happening, and that information. Because remember what I said about efficient markets. It's about what information you have to make a decision. So when you're choosing a stockbroker, that is one of the main things you need to do. Their access to your broker and ability to talk to them. Because our job as stockbrokers is to support you as an investor to make investment decisions, which means you don't need to go looking, everywhere and trying to do your own research. So that choice is very important. Remember, our services are open to you as the public, as the investor. So you can walk into our offices, you can call us, you can email us, and we are able to support you to make investment decisions. So I think that would be the main advice, because value is king, but the information is the key. So make sure that you leverage on the available support that you can get.
How do trading strategies differ from short-term and long-term investors in the Kenyan market?
Well, we do have both ends. Every market does have speculative investors. We have value investors. We have growth investors. And there's so many different, investment strategies that an investor can take. But ideally, a lot of investors have a mix of the lot, because we usually say invest for the long term, right? But what is long term? Do I buy a share today, say at 10 bob, and it goes to 15 bob, which means I've made, a 50% return on my investment, maybe within 6 months, and then I don't sell the shares because I'm a long-term investor, and then 1 year down the line, it goes down to 5 shillings, and I never took my profit. So that comes down to now the decisions and that advice that we're giving the client. What are our goals? What are our objectives? We have to have short-term, medium-term, and long-term objectives, so that when we get the return that we are looking for, then we can take advantage of that price. If we don't get the return we are looking for, what are the strategies? For example, reinvesting our dividends, or buying or dollar averaging, which is it's called dollar averaging, but we call it averaging down. That when a share price goes down and fundamentally the company is strong, buy more so that when the share price goes up, we do get back into profit. So all these are different strategies, but are unique to the individual. So to support that, what we do in order to advise a client is we do what we call risk profiling. And risk profiling is the same way when you go to a doctor. If you just go to a doctor and say you're sick and they say go and take aspirin, you wouldn't go back to that doctor. Why? Because they didn't do any tests. Now, for us, we sit down with you, we will discuss your investment plans, your objectives, your goals, and your risk capacity, appetite. And then based on that, we'll be able to tell you this is what your short term would look like, this is what your risk level is, and to mitigate risk, maybe how much you want to put in risk-free asset like bonds, and how much in shares, and what sort of strategy you would be taking with your dividends.
So, Mr. Gichuhi, where would you encourage traders to take their risks in the market?
Well, again, it goes down to the individual risk profiling. Outside of that, currently the Nairobi Securities Exchange is heavily, prices are very heavily bargaining, they're bargaining prices really, because we've had a bear run, so right now stocks are very low. What I would advise investors is look at the fundamental strength of the share you're intending to buy. If the share is fundamentally strong and it has gone down in value, then chances are it is a very good share to buy. But I would advise approach us. As I said, I'm at NCBA Investment Bank. Approach us, and we will be able to advise you based on ile dawa you need, the medicine that is appropriate for you.
Quite interesting. So what are some of the risk management techniques that traders can employ to protect their investments?
Well, again, diversification. As I said, as we do the portfolio structuring, we are also looking at, for example, what is your cushion against, say, the market volatility? So then we will apply a bit of risk-free assets like bonds, which will only give you an interest return and will protect your principal. Within the shares, we will have what we call defensive, which will give you good dividends and have very stable prices. But then on the other end, we will have those growth stocks which may not give you a lot of dividends, but give you a lot of chance for the price going up. And speculatively, again, as I said, if by chance or by market movement, because markets are volatile, your share price does increase by a certain amount, I always tell people never buy something you don't know what you're willing to sell it at.
Finally, what advice would you give to someone who is new to trading and wants to get started in Kenya?
Open a brokerage account. It's very simple. Approach the stockbroker. For us, you can go to any NCBA branch countrywide and say you want to open a CDSC account. We will open the CDSC account. It's a simple form. All you need is an ID, a PIN copy, and a passport photo. Of course, for companies, there's a few more things that you will need. And once you have opened that account, then we also give you access to our online trading platform. That account should be opened maximum within 2 working days. And then once that happens, you will have a CDSC account. And from there, you can fund the account and start trading. Now, above that, again, take advantage of the information that we have regarding the market. We do have a WhatsApp channel. We shall share that with you as well. And I'm sure within the market, you will find that it's where you get the most information and the support. We will also support you with somebody you can talk to directly and discuss your investment goals.
Final. Can you provide insights into the most commonly traded securities in Kenya and their performance?
Most commonly traded, I think, would be Safaricom, and then we have the blue chip banks, KCB, Equity. We would have the likes of East Africa breweries. Relatively, they would have the most volumes. That is normally driven by the foreign interest in them, because our market is also very active. We have a very active foreign element, investor element in our market. Performance-wise, we have been through a bear run, so we have seen their prices significantly shift downwards. I think we are looking at portfolios, prices down by probably 30-40%. But that in itself is an opportunity because the idea is to buy low and sell high. If you look at COVID came, shares went down. COVID started to, we started to reopen and shares then recovered. So anybody who bought when they were down made a huge return. And then again, we have all the geopolitical headwinds that have caused the current decline in the market. And I think right now is a really, really good time to be entering the market.
Now, Mr. Gichuhi, I know you want to crucify me for this, but this is my last and final question, I promise. Now, in the global markets, in your capacity as stockbrokers, do you help investors trade in NASDAQ, the New York Stock Exchange, Nikkei, commodities? How do you help investors in the same?
Well, you would need to look for brokers who have relationships with, because you need to have a trading broker there to support you. You can't list directly on the markets. On our end, we are currently doing just regional markets, and we are currently working on access to West African markets. So you can do Uganda, Tanzania, Rwanda, and soon we shall be able to go to other regional markets. In terms of global markets, we are also seeking to find, a foothold. But anybody trying to invest in those then would need to look for a stockbroker who has relationships within those markets in the West.
So what is your call to action to Kenyans? Should they invest?
Open a CDSC account. Start investing. Learn investment, of course, in shares is risky, but you should learn from. You will always make gains and losses, and we try to make sure that your portfolio is, gaining more than it loses. But you can't have a portfolio that has never lost anything. But when you lose, what you do is you learn from your mistakes, learn from what decisions were not made right. Did you not make the decision on time, maybe, because time is also an aspect. But all this, honestly, is something you're supported by us as your broker. So approach us and see, things will change. But when you're young, the younger, the better, because then you can take more risk, you can learn more. If you look at the likes of Warren Buffett, who is the super investor, he started investing at 14. Money he was making from selling newspapers or something, distributing newspapers, as a small boy. So it's never too early, and you never know.
Now to our viewers, as you've heard, invest, invest, invest. My name is Natasha Wairimu. Let's meet next week.